Boom. So, my prediction of 4 basis points for today, not far off, actually. Definitely nowhere near either of the market makers' expected moves. So, options overpriced all day. That's going to be the story of this week. Probably be better to focus on sell side, at least until after FOMC is over. We failed to break the upside downtrend, which I guess shifted a little here, but not much. On the 15 minute, and we broke back below the bear flag, bounced, and have not yet to continue that failure, but could into tomorrow, where we could see either a retest of 481 or maybe even a move lower to like the 454.62 level. But futures not looking particularly bullish right now. I don't like that we're still above the long-term trend here. That yellow line, that's the long-term trend from October. I would prefer us to have stayed below that on the failure, but we'll see. It's definitely some weakness into the back half of the day. Commodities still rocketing down as fast as they feasibly can. Thanks, China. Dollar up today, mostly on some weakness in the euro and the pound, largely the euro at the end of the day. And yen also down against the dollar as well as the yuan. So dollar kind of recovering. Still like to see it above 104.65, where we could start to mark a bit of a reversal. The Treasury refunding announcement or estimates came in, and it looks like they trimmed issuance for quarter 3, quarter 4, but we're not yet sure how those now trimmed issuances are going to be offered, right? So we don't know if it's going to be heavier bills or heavier coupons. We'll find that out on Wednesday morning. Correlation kind of turning around into the end of the day. Looks like this might be finding a bit of a floor, and the push back into short vol might actually be starting to fail a little bit. If this does break down, remember that's bullish for IWM, but bearish for tech. Overall, that'll be bearish for like ES and Q, but positive for Dow and Russell. Forward yield on volatility remained elevated today, and slightly up from Friday at 3.44. 7.6, kind of oscillating there. Yield curve is still very slowly uninverting, and they did push the carry trade back a little bit, but not nearly as much as the yen declined. So there might be some additional leverage here that's not being readily pushed. And keep an eye on that, especially going into the BOJ decision this week, where yen could be far more significantly impacted. Move down, but core 3 month also down, so those are kind of moving in tandem. Tail risk hedging picking up enormously, right? This is maybe some of the lowest values we've seen on skew since the April correction. So we are getting more long puts coming in, more of that short vol positioning falling off and de-risking. 67% of the S&P above its 20-day moving average, so it's still a little bullish on breadth, but the results of that still not really realized in tech. NQ is only up 9 points today. The correlation between VIX futures, the VIX future contract in front, and cash VIX moved up to 50.99%. Generally speaking, throughout the week, unless we have like a really nasty week, this trims down. So we might actually end this week with slightly lower correlation than we ended last week, which is at 46.19%. But if we do have a nasty down week, we might see that correlation push up and start moving into a period of possibly higher volatility, where correlation remains high, and that would be fun. Fed fund futures, and I'm not actually sure why this happened because it didn't happen with the QRA. It happened in the middle of the night, but we trimmed back a bunch of the expected rate cuts for Jan of 2024 from zero point 0.7 back down to, well, actually a low of yeah, 0.66, which is a bit odd. I'm not sure why we priced that in over the weekend or why it got priced back out again, but we're still roughly like 2.5 rate cuts by January expected by Fed Fund futures. Where does this put us on the technical side of things? It's a little awkward. Once again today, we failed to break the EMA 30, but we're also propped up by the MA 50. This consolidation is not particularly bullish, and I think another failure to break the 30 would probably see us move down, but I would like to see us fill that upside gap before we do. So I'm thinking over the next 2 days, maybe we push up and then fail into the back half of the week. But we'll see. We moved a little higher today. Short vol sold puts a little higher. So we'll see how that kind of shakes out. Apple below 210. I mean, will it go below 210? I don't know how shitty their earnings are going to be. Supposedly their like sales in China have been picking up, but they're still trailing the competition pretty hard. Tesla? Bounced but failed to clear 235, which is kind of where things get a little bit more bullish. This may continue tomorrow, but if it fails back below 230, it's probably going to head towards 200 again. So a chance at a reversal, but more likely it's just going to be a continuation of the downtrend. Thoughts on Amazon and into earnings? Positioning on Amazon's not nearly as bearish as the rest of the Mag 7, but I know I looked at this last night. Yeah, Delta wasn't really picking up very much this week. Gamma was a little bit. Like, there's a chance it could move back up, but only if it breaks 85. So if it breaks 85, it could move as high as 200. Earnings are what? Thursday? Yeah, I guess, if the market does what I expect and it fills that gap to the upside, we might see Amazon test 190 or maybe even try to push higher into earnings. But I think if the market like indexes just stagnate into the Fed data and we stay where we are under 5,500, probably not. And then if that's the case, Amazon might even drop into earnings. Anyway, all right. Thank you guys so much. I will see you bright and early tomorrow. I hope everybody has a great night. Later.